Hey everyone, and welcome back to the channel. Today, we're diving deep into one of the most anticipated investment opportunities in the digital infrastructure space, the NTT DC REIT Initial Public Offering IPO on the Singapore Exchange. This isn't just any IPO, it's set to be a significant event, and we are breaking down everything you need to know. If you haven't already subscribed to our channel, please subscribe to our channel. Your support truly makes a difference, enabling us to produce more stock and fundamental analysis content. But first, a quick disclaimer. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. So what exactly is NTT DC REIT? It's a new real estate investment trust focused on data centers. This offering aims to raise a substantial amount of capital, approximately $864 million, including an overallotment option. This makes it potentially the largest REIT IPO in Singapore since 2021. The initial portfolio comprises 6 strategically located data centers valued at around $1.57 billion to $1.6 billion. If all goes to plan, we are looking at an expected listing date in mid-July, specifically around July 14th. Upon its debut, the REIT is projected to achieve a market capitalization of up to $1.08 billion. Why Singapore? Well, this massive IPO is a strong indicator of the SGX's successful efforts to revitalize its market. Singapore has been proactive, offering incentives like a 20% tax rebate for primary listings and a $5 billion Singapore dollar fund to improve liquidity. The success of this IPO could encourage more high-quality listings, boosting investor confidence in the SGX. Let's talk about the powerhouse behind this REIT, NTT Group. The sponsor is NTT Limited, a global IT services subsidiary of the Japanese telecommunication giant NTT Group. NTT Global Data Centers, part of NTT Group, is a major player, holding the title of the third largest data center provider worldwide, excluding China. They boast an extensive global footprint with over 2,200 megawatts of capacity across more than 20 countries. NTT Group is showing serious commitment. They plan to retain a significant ownership stake of approximately 20% to 25% in the REIT post-listing. This shows strong alignment with unit holder interests. Even more importantly, NTT has granted NTT DC REIT a right of first refusal (ROF) across approximately 2,000 megawatts of data center properties within its broader global portfolio. This ROF provides a clear and robust pipeline for future growth, reducing typical asset sourcing uncertainty for REITs. Now let's look at the assets themselves. The initial portfolio consists of 6 data centers valued at roughly $1.6 billion. They are strategically distributed, 4 assets in the United States, 1 in Ashburn, Virginia, and 3 in Sacramento, California. 1 asset is in Vienna, Austria. 1 asset is in Singapore. This global diversification generally helps spread risk, but it's worth noting the concentration of 4 assets in highly competitive U.S. markets like Northern Virginia, which introduces a layer of localized market risk. These are high-quality assets. They are carrier neutral, giving customers flexibility in choosing connectivity providers. They adhere to Tier 3 or SWINSIT equivalent standards, signifying high reliability with multiple independent paths for power and cooling, allowing planned maintenance without downtime. The total IT capacity is 80 megawatts. Occupancy rates are impressively high, ranging between 90% and 97%. This means stable and predictable income for the REIT. Regarding ownership, 5 of the 6 assets are freehold, offering long-term security. The The Singapore asset is leasehold until 2070 with a pre-existing 30-year extension confirmed by JTC. Here's where it gets really interesting for investors. The forecasted distribution yields for FY 2025-26, the forecast is between 7% and 7.5%. For FY 2026-27, it's projected to increase slightly, ranging from 7.29% to 7.8%. These yields are notably higher than the typical sub-5% averages offered by many established data center REITs. This premium yield is a strategic move to attract investors to a new listing. NTT DC REIT also plans to distribute up to 90% of its earnings to unit holders, ensuring investors capture a substantial portion of the income. For the 9-month period ending March 2026, the REIT anticipates revenue of $167.3 million with a net property income of $75.9 million. How will they grow? A core part of NTT DC REIT's strategy is relying on high-quality accretive acquisitions post-IPO, facilitated by a mutually beneficial circle with NTT Group. NTT will use capital from divesting stabilized assets into the REIT to fund new developments, which the REIT will then acquire. This capital recycling model provides a clear, predictable path for portfolio expansion. Why invest in data centers now? The industry is booming, primarily driven by artificial intelligence and the continuous expansion of cloud computing services. AI workloads require significantly higher power densities and advanced cooling, ensuring sustained, robust demand for specialized data center capacity. Industry estimates suggest over $1 trillion in global investment is needed for data center infrastructure. Major players like Microsoft are committing heavily, with plans to spend $80 billion in fiscal 2025 alone on data center expansion. The market fundamentals are strong. The global weighted average vacancy rate was a tight 6.6% in Q1 2025, and pricing increased by 3.3% year-over-year. No investment is without risks, and it's crucial to be aware of them. Information gaps. The preliminary prospectus has limited detailed historical financial performance for the REIT-specific portfolio. This makes it harder to assess past efficiency and consistency. Exchange rate exposure. A significant portion of assets are US dollar denominated, meaning distributable income could be vulnerable to USD SGD exchange rate fluctuations for Singaporean investors. Market-specific overbuilding. While global demand is high, the concentration of 4 assets in competitive U.S. markets like Ashburn, Virginia, carries the risk of overbuilding, potentially impacting rental rates and occupancy. Power supply bottlenecks. The industry faces persistent challenges in securing adequate power supply and long lead times for transmission lines. This could constrain future development and lead to increased operational costs. Rising construction costs. This could impact the profitability of future developments and the accretion from new acquisitions. Let's quickly see how NTT DC REIT stacks up against its peers. Digital Core REIT, listed in 2021, current dividend yield of 6.92%, market cap $649.3 million. Keppel DC REIT, more mature, 23 properties, trailing dividend yield of 2.27%, market cap SGD 5.26 billion. U.S. peers like Digital Realty and Equinix, significantly larger global players typically offering yields in the 3.5% to 4.5% range. NTT DC REIT's forecasted yield of 7 to 7.8% truly stands out as notably higher than the typical sector average. So, is NTT DC REIT a good investment? Overall assessment, it presents a compelling opportunity for investors seeking stable income and exposure to the high-growth digital infrastructure sector. Key positive drivers: high growth sector, capitalizing on AI, cloud computing, and digital transformation. Attractive yield, significantly higher than many established data center REITs. Strong sponsor and pipeline backed by NTT Group with a significant stake and ROFR for future acquisitions. High asset quality and occupancy, carrier neutral, Tier 3, and 90 to 97% occupancy rates. Strategic listing location, benefiting from Singapore's pro-listing initiatives. Institutional endorsement, significant commitment from cornerstone investors like GIC, $100.9 million, its first investment in a Singapore-listed REIT. Factors requiring diligence: limited historical financial data, relying heavily on projections. Market concentration risk, potential oversupply in specific U.S. markets. Industry-wide constraints, power supply bottlenecks, and rising construction costs. Currency fluctuations, exchange rate risk for Singaporean investors. In conclusion, NTT DC REIT offers a compelling entry into a critical and expanding sector backed by a strong sponsor and an attractive yield. However, as with any new listing, it's crucial to review the complete prospectus to fully understand the financial intricacies, debt structure, and risk mitigation strategies. For long-term investors interested in digital infrastructure, this IPO warrants serious consideration. What are your thoughts on NTT DC REIT? Let us know in the comments below. Don't forget to like this video, subscribe for more in-depth analyses, and hit that notification bell so you don't miss our next video. See you next time.